This region around the Great Lakes has been called a heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Monday, June 23rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, July corn down 6 1/4 at 422.5. July soybeans were down 4 1/2 at 1063.5. And July Chicago wheat was down 5 3/4 at 562. No export sales announced here this morning, so we'll jump right in. Hope everybody had a great weekend. Certainly no shortage of news, obviously, with the attack that we put on Iran over the weekend. We've got, back and forth bombings taking place all night into this morning. So it seems like, crude oil with a real strong opening last night quickly sold off here. And then we finished, on the lows here this morning. So Justin, we'll jump right in. It just feels like we're trapped kind of in a real good weather pattern. Nothing real exciting in the markets in terms of fundamental grain news. And we're just still pasted to outside market and the volatility of what's going to happen in Israel and Iran.
Yeah, I mean, it's pretty surprising. I think we talked about this last week, but I think if this 10 years ago, kind of these geopolitical stuff, you'd have much bigger reactions than we're seeing. And, there's zero fear right now in the grain market. I think things are good. They're going to be good. The funds are willing, or whoever's willing to sell any kind of rally. Volatility stays low. So yeah, it's kind of a dud trade. I mean, like I said, I think you would have had, going into the weekend, I think crude would have been closer to 100 if this was, 10 years ago, just with all the potential things that could happen, closing down different shipping lanes and, disruptions to supply. The grains would have had double digit moves too, in that time frame. And there's just no risk premium, or there's no interest in building a risk premium. So
have we taken that many participants out of the market? I mean, it just doesn't. What's your opinion?
Yeah, it's a good question. I don't know. I think just computerized trading, and you just you definitely have taken a lot of participants out. And now I think it's more algo, trading and things like that. And guys that are willing to put on a good position, it hasn't paid to do anything. You've kind of got beat on the head every time you try to put something on. So I think there's not a good enough fundamental story. Now, if you had a good fundamental story, if the weather actually got bad, for example, I went to a baseball tournament in Peoria Thursday night, and it was supposed to be, 95 and sunny, and it was 75 and raining on Friday. So, if we could predict the weather more than 24 hours out and it was actually hot and dry, maybe the market would start to care. But so far the crop looks great. And until you actually prove, it feels like we're in the prove that we have bad weather or the crop's going to get hurt before we're going to give it attention. Because, the last few years you've had bad weather and it always ends up having, pretty good yield. So that seems to be the mentality right now.
Yeah, Ben, what's on your mind after the weekend?
Just kind of jumping on what Justin said. There not a lot of interest. Super low volatility. I looked at a three-way trade that I had done back in February for quite a few of my customers, and one of the legs on it was the 470 puts, and on a 30-cent decline, those puts had gained 4.5 cents, and there were shorts around it, but it just goes to show you how poor the volatility has been. It's bled out. It really supports what he's saying, that there's, even if you've been short, it's been just a tooth pulling grind of 30 cents over a period of 3 months. So the market just seems kind of wrapped up in a low volatility, no risk maelstrom. And I think mechanically over the next couple days, getting July out of the way, there certainly seems to be, something going on there that I think is worth looking at. We get commitment of traders this afternoon, first notice day, and then quarterly stocks report. So hopefully we can find something that will jar this loose to give us some movement away from 440, and hopefully it's higher. But in the East, I think there was definitely some switching to beans. I don't think it's going to be a massive amount, but all those things are worth watching. I think the next week or so, maybe we loosen things up a little bit. But right now, it's just there's nothing out there that seems that can put any sort of aggressive bid in these markets.
It could be. I mean, sometimes it's super simple, and you hate to think it's simple, but you could just break right into first notice day. I mean, we've talked this for a while that July has just been this, for whatever reason, if people, that was the long that they've had that you've got to work through, whatever it is, July, D's corn's making contract lows. We're going into first notice day. It'd be a classic first notice day bottom if we just beat the hell out of this market going into that. And then you're going into 4th of July. So kind of my thought is if you're trying to be bullish, anything, you wait till first notice day and then see what the report does. I mean, all that comes around the same time as the stocks report, acreage report. We talked about this for a while now. I think that's kind of got to wait and see what that says.
Justin, isn't it bizarre that nobody's talking about that either? I mean, there's nobody even chirping about acres anymore.
I mean, I think it's a huge report.
Yeah.
Because you could convince me, because we have such a big corn acreage number written down, you can convince me that we gain. I mean, the swing of what we could gain or lose in acres is, I think, relatively high, and same with stocks, right? You're going in here, you're like, okay, we got July D's at a 14, almost 15 cent carry.
Mm-hmm.
We're supposed to have sub 1.4 carry out. Like, is there going to be one of those 300 million bushel surprises to the upside? At this point, I don't think that would be a surprise because that's how the market's trading. What if you lost stocks? I mean, that would be a conundrum. What if you lost acres and stocks? What if you gain corn acres? So all these kinds of things, I think we're kind of on pins and needles here. That's why it's so surprising that there's no volatility or like fear factor. I'd be scared if I was short beans and we lost 1 million or 2 acres of beans. But that's just not the attitude right now in the market.
Well, and you're looking at corn here with, 12, 13 year tightness in global stocks and corn well below the cost of production, right? It's not like we're burdensome globally with corn. Could we get back to 2 billion bushel carry out in the U.S.? Absolutely. But we still have a long way to go to get there. So it definitely, makes you question some of the things you're looking at.
Yeah, and there's been a lot of positive EPA, our biofuel policy developments over the last week. So I think from a demand side, we've gotten a lot of positive news, and we continue to export. We continue to crush for ethanol, crush for soybeans. So we've got a really good demand base, and we're very, very comfortable with record yields written down to keep everything, okay. So it's not. It just feels like it's one of those, like, as long as they're gonna keep selling every rally as long as it works, And so far they've gotten away with it, right? The corn's in this really interesting level where we get here lower so far. It has a hard time continuing lower. We'll see if it presses to new lows. I'm guessing they're going to try this week. If the weather, doesn't get worse, I'm guessing we're going to try to make new lows in D's corn and July corn. But we'll see. So far, every time they press down at these levels, it doesn't hold. And then same thing on the rallies. It's just this 15-cent grind of chopping everybody up.
Dustin, give us a few thoughts as we start the week here. What's on your mind?
July D's 1,400 new lows for the spread move. And, I know it's all on good weather, but it's the July contract with near pipeline carryout. So just to echo what, these guys are saying, Why is that? Is it because we actually have more supply than we expected? Is it because safrinha crop was good? Time will tell, but it feels like old crop is the poison pill, and it's not just because of good weather, right? It's something to do with available supply or market positioning. We have noted a couple times. We'll see in the next COT report here, but what the funds are holding, they're holding a fairly large short in July as a net short position as of last week. So, that could also be driving maybe some of this too. And the post first notice day will tell a lot of that story. So I agree with Justin when exactly he said. It could be up till FND, and then we'll see what it's capable of doing. I would not be surprised to see a rebound post first notice day.
Very good. Let's move over to livestock quickly. Ryland, we had cattle on feed, came out Friday afternoon. I'd say anything highlighted would be obviously just a lower than expected placement number, but we have turned cash lower, and there's chatter and concern that have we kind of turned the page a little bit with this lower cash. And then we're going to have quarterly hog and pigs on Thursday, so maybe gets a little insight there as well.
Yeah, no, I mean, obviously the report wasn't really too much of a surprise. It was a down report in general. You were down 1.2% on feed, placements down 7.8%. So this is still within the range of the estimates in the lower end. But I mean, the market, I think, did see some of this coming. But yeah, the real concern is getting baked in here by cash. You actually had choice 329 lower on Friday. It was a mixed report at 390.50, and overall, the South was down about $7 to $8 in cash, going 228 to 231. The North, 235 to 238. So I think, what is the market going to trade today? What's going to take precedence? How much have we baked in? We've got this big discount on the board, and I think if you can convince enough people that things are really turning around, a big technical close below the 40-day moving average, you can see some follow through. And we've seen that before every time we get kind of to these kind of technical support levels. So I do think initially we're likely to get a little bit more concern in the longer term, but overall, like, we are seeing things like the border closure really start to eat into those placement numbers. So yeah, I mean, you got kind of a mixed bag as which, what's more important right now. So I think the market's got a lot to has baked a lot of this in so far with this discount. But I do think we are coming to that time period where we are going to get into a roll going from August to October. And I think that sheer movement alone could create a little bit of weakness that, the market may not be anticipating just by that alone. So I think that's something to look for as well. I think the cash sentiment is obviously lower. These lower kills are eaten in to the cash price. So yeah, overall I didn't think the report was enough to really change the tide, and cash is probably going to be the focus for this week. But yeah, on the hog side of things, I mean, the market's just a juggernaut right now. I mean, new contract highs last week. We did see cash down about $2.66, but like overall, the product markets are just keeping everybody awake here. Carcass is up $3.16. It's a huge jump for the week, and it just feels like that demand is really firm right now, whether it be retail or whether it be wholesale. So I think that's really what the focus is going to be, especially just going into the report right now. I think we need to see some lower supplies on the report to kind of justify where we're at right now. And there's been some chatter here and there about disease, nothing too crazy, but I mean, that talk is out there, and I think that's natural when we start seeing a market rallying like it is, that there's some supply problem that the market just hadn't quite seen yet. But obviously, once again, we're at these high prices that the producers can really take advantage of some of those forward margins. So I do think naturally you run into an over market and you start seeing some producer hedging. You see a little bit of a downturn, but right now the trend is up, and I think overall support levels are likely to hold unless the product market starts to slip.
Very good. Appreciate the update there, Ryland. One thing to note, we're going to get crop progress and conditions out here this afternoon. It'll be at 3 o'clock Central. So we'll take a look at those, visit about those in the war room here tomorrow morning. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed with everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. We hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.